with the, like you have in the columns, like G, like the P to E, the normal, the growth rate? Like what are we doing with that?
Well, let's look at these. Now, what I did then, I said, okay, here's the top companies, and I'd say, would I want to buy the Standard & Poor's index right now with money that I have? So from the last video, the price to earnings ratio in aggregate is how a company is valued long term. So if a company earns $1 in earnings, Warren Buffett says you should pay no more than $15 for that. Another way of saying it, if it earned $1 in 15 years, you've earned back your investment if you got all those earnings in cash. So, and he doesn't want to pay more than that except in special situations. So if you look at NVIDIA, you can see right here the price to earnings ratio right now is 46 times earnings. Now the reason it's so high is because of the growth rate. People are thinking that's a stock on the come. There's a lot of AI fueling this company. In fact, the growth rate for the last 10 years has been 58%. And the other school of thought, besides the Buffett, the 15 times earnings, it says, well, you can pay up to the growth rate of the company. So if it's growing at 58% per year, you could have a 58 times earnings because you're figuring in at that growth rate in 2 to 3 years, it's going to capture, your PD is going to be a lot lower, at least in today's dollars. Now, so the normal PE is 46, the growth rate is 58, and that's why NVIDIA has grown so much and why it's the top market cap in the index right now. Microsoft, it's a more stable company, it's been around a lot longer. The price to earnings ratio right now is 36.6. It's in red. We'll talk about that later. The normal PE over the last 10 years is 31. The growth rate is 18. So Warren Buffett would only pay 18 times earnings, which is almost half what the market's valuing it right now. So Microsoft, that's why it's in red. That's a pretty high PDE by growth rate and by the Buffett metrics.
So the target price would be roughly $250 or so?
Yeah, if it goes back to the growth rate, you'd lose a lot of money. Now, the theory is it's going to grow, but I think that's, of the two, it looks like I'd rather go with the higher growth NVIDIA at the 46 price to earnings than Microsoft at 18. The truth is I'd want to probably do neither of them, but those are the first two. Apple, right now is 31. The normal PE is 24. The growth rate is 14. So Buffett would pay 15 times earnings. This is probably way overvalued by Buffett's indication.